What's going on, guys? Welcome back to the channel. My name is Mark and this is 360 Finance. In today's video, I'm going to be showcasing my best investment of 2021 on a percentage basis. This position isn't actually a large percentage of my portfolio, but on a percentage basis, it has been my best investment of 2021. So I just wanted to showcase it with you guys, talk a little bit about what my thoughts are of being a shareholder in this company, why I bought this company, what I bought the company at, and we're just going to take a look at some of the insider selling or buying, some of the institutional ownership, some of the comparisons against their other competitors, what their earnings forecast looks like, their last quarter, what to expect on their next quarter, and all that good jazz. So hope you guys enjoy this content. With that being said, let's go ahead and jump into the video. Alright, so as you guys can see here, Waste Management up at the top here. At the time I'm doing this video, I am up about 23.73% on this position. I am averaged into the stock at $113 and it's currently trading at about $140. Like I said, it's a very small percentage of my portfolio, only 3.54%. When I bought this company, I wasn't really looking for capital gains, to be honest. I was just buying it because it was a company that's entrenched in its industry. It is kind of the leader in its industry and it has a wide economic moat, in my opinion. So Waste Management remains one of the most ethical companies in the world and is on this list for the 12th time in their existence. If we just take a look at their last earnings call, their first quarter earnings, which was released in April 27, 2021, just looking at the high level overview, when you compare it year over year to last year at Q1, you can see that pretty much everything across the board has improved, from revenue to operational income, EBITDA, operating EBITDA margin, their net income, their diluted EPS, everything across the board is higher. You can see here that the CEO of the company had said we had an exceptionally strong quarter to the year, with first quarter adjusted operating EBITDA growth of more than 14% and adjusted operating EBITDA margin expansion of over 100 basis points. In addition to the strong performance of their core business, the integration of the advanced disposal is going remarkably well, which is one of their most recent acquisitions. You'll see when we get to the balance sheet, there was a big drop off in terms of cash from 2019 to 2020. That is because they made this acquisition of advanced disposal. And you can see here they expect to achieve $130 million in an annual run rate synergies from operating costs and selling and general administrative savings, which is more than a 60% increase from their initial estimates. Now looking at their key highlights from the first quarter of 2021, again, these came out on April 27th, so these are a little bit old, and we will be expecting Waste Management to report Q2 in the coming weeks here. I'm just going to scroll through and you can kind of read as you go, but the thing that I kind of want to outline here is that even though they're a mature company, they're still focusing on reducing costs. You can see selling and general admin expenses were 1.1% of revenue in the first quarter of 2021 compared to 11.4% in 2020. When you get a company like this that's very cyclical, it's very predictable, and you know what to expect, the fact that management is still focusing on cost management is great to see. This is a company which I have extreme confidence in management. The other thing that I just wanted to highlight here as well, if you move down to free cash flow and capital allocation, you can see that the net cash provided by operating activities was $1.12 billion in Q1 2021 compared to $765 million in the first quarter of 2020, which represents an increase of $355 million, a massive jump in profitability and free cash flow there. And you can see that was primarily driven by an increase in operating EBITDA and the lower incentive compensation payments and improvements to working capital. But I'll talk about this once we get to insider selling in a sec here, okay? Ultimately, what management expects from this company is to grow between 12.5 to 13% in total revenue. And of course, they're highlighting their synergies from the acquisition of advanced disposal here, which is expected to total $150 million, with $130 million coming from operating costs and selling and general administrative savings, and $20 million coming from CapEx savings. Ultimately, here's the concluding comment from management. We've previously discussed that Waste Management is well positioned to benefit as states and provinces emerge from the pandemic. They expect strong results as their commercial and industrial landfill businesses, our three most profitable lines of businesses, continue to recover over the remainder of the year. Well, they say recover, but when we actually take a look at the numbers, it really didn't falter, okay? So let's just go ahead and jump over to the market beat here, and let's just a quick look and run through a few of these categories here, starting with analyst ratings. So we have analyst ratings for the past 180 days, and really the only thing that changed is that 2 analysts took away their buy ratings. Ultimately, analysts are kind of set on what they are recommending for this company. Most of them recommending a buy, although there is a couple sell recommendations which have been maintained for about half a year. If you actually go look at the analyst ratings history, for the most part, everybody is boosting their price target or reiterating the fact that it is a buy. There's a few downgrades sprinkled in through here, but you can see for the most part, all the analysts are reiterating the rating outperform or boosting their price target. When we actually take a look at the competitors, here are their main competitors all kind of outlined here. So you have Republic Services, Rollins, Stericycle, Tetra Tech, Clean Harbors, and Casella Waste Systems. Republic Services is the main one. These ones are all much smaller and not directly comparable to Waste Management in my opinion, sorry. So we're just going to kind of take a look through the Republic Service comparables, and you can see here what you'll notice along with some of the other comparisons is from a price to sales or the fundamental ratios in general, price to sales, price to earnings, price to book, things like that. You are paying a little bit of a premium for Waste Management, and in my opinion, this premium is justified given the large economic moat that Waste Management continues to benefit from. So you're paying a higher price to sales ratio, you're paying a higher price to earnings ratio. You can expect that because they are the largest company in the industry. What I'm bullish on overall is just the industry as a whole. You can see net profit margins basically the same for these companies, but Waste Management has a higher return on equity. And from a analyst ratings standpoint, Republic Services does have a slightly higher score. You can scroll through this as I talk here, but basically I'm just gonna show some of these statistics as I talk here. Basically what you're paying for is you're paying a premium to own Waste Management because they're the dominating firm in the industry, okay? They will always be, and what some analysts are starting to notice too is that the barriers to entry are actually really high in this industry. If you think about all the environmental regulations that you have to endure in order just to set up a new landfill, for instance, it's astronomical, okay? And so this is somewhere where Waste Management benefits from, and it's kind of harder for these smaller companies to kind of enter the industry and be as successful as Waste Management, given how long Waste Management's been in the business, how much cash Waste Management has, and Waste Management's ability to just swallow competitors, basically. When I first made this video on why I bought this stock, the main reason I bought them was because of their dividend, and you can see here they have a history of increasing that over time, regardless of their share price, okay? So this is a dividend growth income investment for me. And if you scroll down here, you can just see their history. They do have a history of increasing their dividend, okay? So back in 2015, they're paying 37.5 cents a share. It's all the way up at 57.5 cents a share now, okay? So obviously the more shares you own, the more they pay you out, etc., etc. I don't own a ton of Waste Management, but it has been my best investment of the year so far. Taking a look at their earnings forecasts or their EPS forecast here, you can see it's very cyclical. You go from Q1 to Q4, and Q1 is typically their worst quarter, and it gets better gradually throughout the year, and we are continuing to see that cycle. It looks like in 2021 as well, so we would expect a higher EPS in Q2 than we saw at Q1, and you can see the current consensus estimate from analysts is an EPS of 1.21. If you look at their history of their EPS by quarter here, you can see they also have a history of beating the consensus estimate, or at least being very, very close to it. The further we scroll down here, you might see 1 or 2 quarters where they miss, but for the most part, they're almost always beating analyst estimates, and that's what I would expect again come Q2. Now, if we're just looking at their financials here, I just want to outline a few things. We're not going to go entirely through the income statement and balance sheet here, but just so you guys can kind of see here how much revenue they bring in on an annual basis. It's anywhere from, I guess, well, this was 5 years ago, but they brought in $753 million net income in 2015. Well, that's up to about $1.5 billion now. And yes, it has been trending downwards for the past couple of years, but they have had a few acquisitions, and obviously 2020 was the COVID year. This is a steady company, and if you look at their balance sheet here, we're just going to take a look at how much cash they have on hand relative to their current debts, okay? So they have exactly as much cash on hand as they have to pay in debt this year, okay? You can see they had a much larger cash balance in 2019, which they use to fund the acquisition of Advanced Disposal. Ultimately, this is a steady Eddie type of company, right? They have recurring steady revenues. There's always going to be trash that people will need to have picked up. There's always going to be a need for these landfills until there's some sort of innovation. So this is really just an industry that I'm bullish on, to be honest, okay? If we look at the insider trading, there is a lot of selling and not a lot of buying, but that isn't anything new, okay? This has been happening for years. At the end of the day, a lot of these compensation packages, people are just granted stock options, and of course, if you're management in the company, you're just going to be taking advantage of that. This year, there was a big sell this year by the CEO. You can see he sold about, looks like a little bit under a third of his position, or almost $18.5 million. So who knows, maybe he's buying some real estate here, maybe he has some debts to pay or whatnot, but this isn't alarming to me because he still holds 66% of what he held in terms of total stock before this sale on June 1st. And yeah, if you scroll all the way back, there is not a lot of buying, which in certain cases can be alarming, but to me, this isn't a signal that I should be selling the stock at all. Okay, almost no net new buying in the past 3 years, and the reason that's not alarming to me is because institutional ownership is constantly climbing with this stock. You can see every quarter there's more bought than there is sold for the most part. I mean, looks like there's 2 quarters here where there is a little bit more sold than bought, but for the most part, the buying is outpacing the selling when it comes to institutional ownership, and total institutional ownership in the company is about 74%. We don't need to go into the specifics of which companies are actually buying here. All you need to know, institutional investors love this company, and that's evidenced by the net buying activity in the past 3 years. That's pretty much it for the video, guys, okay? So waste management is my best investment of 2021 so far. Unfortunately, I didn't put a high weighting on it. I wish I had bought more when I bought in January, but that's the name of the game. You're not always going to get the weightings right in your portfolio, so just another lesson learned. At the end of the day, I'm still making money on it, so I hope you guys enjoyed this video. If you did, don't forget to smash the like button, subscribe to the channel, and if you learned something, share the video with a friend, okay? So I hope you guys enjoyed, and I'll see you in the next one. Peace.